Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I am Dustin. This is the show where we look at the most active stocks on Yahoo Finance. And if we are looking at what has been the most active today, we can see we got Snap. Now, I can already tell based when you're down 17% in one day, things were not good. So you're probably watching this video because either A, you lost a bunch of money, or B, you're on the other side and you made a bunch of money. I want to call out what I am seeing here. If you're interested in using the same app, you can go to traderanges.com. You can sign up for free. All it takes is a Google to sign in. You can come in. I give you 30 different tickers that you can look at every single day. You look at the trade ranges. You can see the individual candlesticks. You can get some volatility. You can look at the correlations. And then you do get a data table here. Now, if we're looking just at the line graph in terms of what we're looking at in terms of the trade ranges, what I can tell just looking at Snap very up close is that A, things have been essentially ugly. When I mean ugly, I mean trendless. Things have gone nowhere. When you're thinking about the market that we've seen, things have been riding high. Snap here looks like it's essentially been going sideways to slightly up. I said that I thought that Snap had potential for an upward move from here, but if we start to look at the data, I'm sure it'll become clear of why we are seeing the move that we did today, down 17%. Now, that is hideous. That is ugly, especially when you break below the bottom of your range. We look here at the candles. What we can notice is that we obviously saw a high here. It looks like around the middle of July, probably July 23rd or 22nd. Somewhere in there was the very high, probably expectations of what earnings we're going to be doing. One of the things that I do to say, if you look at my volatility here, is that I believe that trend reveals itself as volatility starts to fall. When volatility is falling, in my opinion, that is when trend reveals itself. Now, if we look here, what we have is we have volatility falling while we have the correlation is also high. I'm very, very curious. If we look at the traditional volatility, that is a massive move in the type of move that we saw today. Now, let's look at what we see in the data table. First off, what you can see is that yesterday on the 5th, we were at $9.39 when we closed. We did have massive volume, 71 million, and we were down 84 basis points. Today, again, we were down 17.15% in a day. And clearly, with that being blue background with white lettering, or blue lettering with white background, that means we were three standard deviations below its mean. And we saw a humongous spike in volatility, 141 or 184 million shares traded today. We've obviously flipped bearish, but one of the things that I'm going to point out is that we have been below our trade level since the 29th. We have been below 958 since the 29th of July, which is an indication to me that things are starting to change, something to definitely pay attention to. And if we look, one of the major things that I'd be looking at as well is that we are always still negative on the 6-month rolling return. That is hideous. We look at the 1-year rolling return, we've been negative the whole time. I would consider that every single thing we've seen leading up to today was essentially a counter trend rally. Now, if you're thinking about where I would expect Snap to go from here, first off, it's going to take a few different days for it to recalibrate, find its level. I'm not sure. It must have had a catalyst earnings or some announcement. Maybe I'm not sure. But if we're really going to be honest, the bottom of the range right now is at 823, and we're at 778. Some people to buy falling knives. I do not. Let's go ahead and see what else we have. AMD also down 6.4% today. That is not great. We have here an AMD. See, the thing is about AMD is that this is essentially tied to whatever is going to happen in NVIDIA. Obviously, NVIDIA is the big bad wolf that is roaming around the entire market, that is for nearly $5 trillion in market cap, just floating around in the semiconductor space. AMD is essentially going to show you the exact same thing in terms of relative strength to the market as whatever NVIDIA is doing. Now, if we're looking at the 6-month rolling here, we can see that we've been on bullish return. That's what this means here on AMD since the very beginning of May. It looks like today we ended up closing at 163.12. We are very much in the middle of the range. We still have what appears to be a higher high in terms of the overall range itself. Obviously, it's not a real higher high, but it's higher than it was a month ago. I do like the move that I'm seeing in AMD if I believe that things are going to resolve themselves. I'm sure that there was some sort of tariff announcement, some sort of semiconductor thing that obviously came out of the White House today. Is probably initiating some sort of sell here on AMD. We look at the move that we've seen in the candlesticks. Obviously, as I mentioned, we've essentially seen since the very beginning of May a very big bullish sentiment, been very positive. We can see we've got volatility that continues to break out out of AMD. We do not have volatility rolling over just yet, but as I mentioned when we were talking about Snap, I believe volatility is rolling over. That is when you start to see trend truly reveal itself. Now, the only negative thing that I'd say is that we have volatility, which is breaking out. We have correlation, which is negative. Generally, that would mean that we're going to have a price to fall, but the price is continuing to rise. But if we start to look at what we have here in the data table, we can see we have a green background with the black lettering. That means to me that we're right in the middle of the standard deviation range, right in the middle of the range for AMD at the moment. Obviously, today was a massive, massive volume day at 133 million shares traded. We are still bullish. We are still not well above, but we are still above the trade level. I definitely will be paying attention to 163.09 over the next few days here to make sure that we can either hold that or to see if we fall below it. We do have higher lows in the bottom of the range. Obviously, we're done with the higher highs, as I just mentioned earlier. Looks like the bottom of the range is at 136. That would be terrifying if we made it there. If we start to look at what we see in terms of the volatility is rising. We look at the future price path, it has been priced to fall for quite a while here. Looks like we've had the price path as price to fall since it looks like the 17th of July. And the price has essentially gone higher and higher in the face of that. We've essentially gone nowhere since then. Because if we look on the 1 day, we're down 6.42%. On the 5 day, we're down nearly 10%, 9.13 to be exact. These are some concerning signals that I'd be looking at in AMD. It looks like, considering that the market was on a tear and has been for the past few days, that today was definitely a pullback day. Lucid LCID. When we're thinking about Lucid, this is be pretty much tied to whatever's happening most likely in Tesla, Rivian, Neo. Those are the plays that you're looking at around Lucid itself. Let's just see what we have here. I'm starting to think that Lucid, if you watch my previous videos, is essentially a 6 pounds of shit in a 2 pound bag. Now, I don't mean that about the company. I mean that about the stock. I'm sure they got great cars. I'm sure they have fantastic products. I'm sure they have great management and great employees. When we're looking at the actual stock itself, it has gone nowhere. Look at this thing. What are we at? We closed at $2.18 today. When people were riding high, we were at $3.13, probably what, 2 weeks ago. This is concerning. Now, the top of the range has continued to break out, but that's more a reflection of the actual volatility. Now, if we look at the candlestick chart, I am definitely saying that if I was going to be a buyer of Lucid, it might start to be around where this bottom range has been here. It looks like just below $2. We are not below $2 just yet. But as we start to look, we might be able to see some actual reversals here because, again, as I mentioned in Snap, mentioned in AMD, trend reveals itself when the volatility starts to roll over. My concerning thing, my truly concerning thing, is that when I look here on Lucid, we are now 2 standard deviations below the mean. We are fully bearish. We are fully below the trade level. And you can see here, yes, we may have a price to rise in our future price path, but we are negative on the 1 day, 5 day, 15 day, 1 month, 3 month, 6 month, and 1 year. These are not good signals. These are not the type of things that you would expect to see in a stock that is moving up. You want to know how I can prove to you? Let's look at QQQ real quick. Now, the difference between QQQ and Lucid is going to be stark. Why would you say that? The reason is because if you look at what's been going on in QQQs very recently, QQQ has been on a tear. It has been hitting all-time highs. It's continued to show trending volatility higher and higher. Now, if we're looking here, we're going to move it to 3 months. That line chart, it doesn't even do it justice because it's been such a tight range. Looking on the 3 month on the candlestick, you can tell we've essentially been up and to the right ever since the middle of, it looks like March, April, and nothing has really been stopping this. And again, as I mentioned, we looked at Snap. We've already looked at Lucid. You see how the volatility is falling and the price continues to rise in QQQ. The reason why I say that is because when the volatility starts to fall, that is when trend reveals itself. Volatility falling is a precursor to people buying. If you ever were around in the markets in 2013, that was a very low volatility market. The price, we were up 30% for the year. If we look today at the QQQs, look at this. We are up, it looks like 1.26%. We closed at 567.32. We have red background with black lettering. That means that we are 2 standard deviations above the mean. We did it on very low volume relative to what we've seen on some down days. We are still very bullish. We are well now above our trade level. We've got higher lows in the bottom of the range. You can see that we are positive on the 1 day. We can skip the 5 day for now because we're only down 12 basis points. We're positive on the 15 day, 1 month, 3 month, 6 month, and 1 year. This is the difference in what you'd be looking at versus what you see in Lucid. Look at NVIDIA. I'm very curious with what we saw in AMD already. I have a certain belief that Lucid or NVIDIA, excuse me, with what we've seen in AMD, that NVIDIA is going to be showing very similar signals. Now, I'm not expecting it to be a full breakdown. What I'm expecting to see in NVIDIA, and again, if you want to use this exact app, go to traderanges.com. You can go ahead and sign up for free. You get 30 stocks you can look at every single day. You can add things to your portfolio. Go ahead and look at sectors, macro, world, things like that. But when we're looking at what we see in NVIDIA, you can see the exact same move we saw in AMD. We've essentially been up and to the right ever since we went bullish on the 8th of May. You can see the top of the range continues. It's not necessarily at a higher high just yet, but the price is staying in the top half of the range. We look at that with the green bar. That means that we're in a bullish move, in bullish sentiment overall for the stock. You can see that we continue to break higher. Again, as we started to see the volatility break here in the middle of June, we saw the stock start to trend higher. And then we started to see a move with breakout volatility here. The stock did go higher there, but now we started to roll over a little bit since the very beginning of July, and the stock has continued to march on. Now, if we're looking at what we see in the table here, again, we have red background with black lettering. That means we are 2 standard deviations above the mean. We are very much bullish. We are above the trade level. We've got higher lows. We've got higher highs. We got the price to rise, the future price path. And you can see across the board from the 1 day, 5 day, 15 day, 1 month, 3 month, 6 month, and 1 year, we are fully positive. This is the type of move that you want to see. Now, I'm not sure if this is going to continue because of what we saw in AMD earlier, but what I would expect is that NVIDIA is going to either pull back in the middle of its range, potentially come down to the mid 170s, 175, somewhere in there. Definitely keep above the trade level, which is currently at 172.89. And then from there, it's going to continue to rocket higher. Why would I say that? Because it's bullish. Now, if we look at SMCI, I think this is a semiconductor company as well. I'm assuming that this is a semiconductor company as well. I can tell based on what we've seen in AMD and now the difference between what we've seen in NVIDIA that I'm not quite sure what we would expect here in SMCI. I would expect that hopefully this thing is continuing to ride, but we will find out. Now, that is an ugly chart. Now, I'm not saying that's an ugly chart from what I'm seeing from SMCI because of the move that we saw over the past few weeks, the move that we've seen over the past few days. Now, we are pretty much at the very bottom of the range. If you look at this, what is this? We are at 46.79 as the close today. You see we're still very much bullish. That's why we have the green at the bottom. We are very much at the bottom of the range, which means that if you're thinking that this might be a good opportunity, at least the way that I would look at it, I would say this is a good opportunity to buy into SMCI. Because based on what I've started looking at and when I'm switching over to Yahoo Finance, it looks like there's going to be 100% tariff on semiconductors. I would not be concerned about this, only because obviously Taco, right? Trump always chickens out. We know how this is going to go. He's going to threaten something, then he's going to pull it back. He's going to raise it a little bit, and then companies are going to figure it out. But if we're looking at what's going on here, we are 2 standard deviations below the mean. That's what the blue background with the black lettering means. 46.79 on massive volume. Now that is a little concerning, I'll be honest. And we are now below our trade level at 53.88, quite a bit lower. A little bit concerning to be fair, just because we're at 46.79. It looks like the actual trend in terms of what I'd be looking at would be 44.07. We're about as close as you can get. The top of the range is at 63.69. I do see a future price path as price to fall. The volatility is rising, and we are now negative on a 1 day, 5 day, 15-month, 15-day, 1 month, and 1 year. I'm going to completely change my trend on what I've been saying on SMCI or SCMI or SMCI. I would not be paying attention to this. Apple has been one of the staples of the market for probably the past 15 to 20 years now. Ever since it came out the iPad, this thing has been essentially running higher and higher. Now, if we're going to see what kind of movement we're going to expect inside of Apple, I would say, based on what we see with the Qs, based on what we know about large cap tech, uh, Apple's going to have itself a good runway. Now, this is a big candle today. I'm not going to lie. That is a beautiful candle. We've essentially seen what looks like a little bit of tranquility starting to fall, volatility start falling, still falling, and it looks like we are going to be resuming a trend upward. Now, the difference that I would say here is that we probably need something that is very, very aggressive in terms of the reversal. Only because if we're going to look at what's been going on in Apple for the past 9 months, this thing has essentially gone up to sideways to nowhere. We need to see a massive change in volatility higher to get this thing to probably have some gaps higher to really change the trend that we've seen. If we go ahead and look at the actual data table here, we are back from what was we were 3 standard deviations below. Now we were 4 standard deviations below back on the first. We have 3 standard deviations below at 202 yesterday. We're up 5.09%. This thing is essentially starting to show some real aggression in terms of the upside moves. Look at we are positive now on the 1 day, 5 day, 15 day, 1 month, 3 months, still negative on the 6 month, but positive on the 1 year. It's probably been a long time since we've been positive on the 1 year in Apple. It looks like all the way back to the 10th of June was the last time that we were positive on the 1 year in Apple. That is a humongous signal, in my opinion. Apple is starting to look something that I want to be paying attention to. But tell me interesting in the comments below. Again, if you're interested in this, you can always go to traderanges.com and go ahead and sign up. It is automatically free for you to be able to sign up. You get 30 of these every single day that you can go ahead and look up individual signals. You can create a portfolio just by adding things. Just click on the diamond, it'll get added to your portfolio, and then you're not going to have to think about it. You can just come in, automatically start to see what you've got in your portfolio. You can click on it, flow, just give you all your levels, give you everything that you're looking for into your trade level, your higher, lower, your buy bottom, your sell higher, every single thing that you've been paying attention to in your overall market. And then at the very, very bottom, you'll be able to get trade analysis based off of AI. One of the things that's really nice about this is all included for free in the first 30 tickers that you use. If you want to be able to get anything a little bit more exceptional in terms of G20, cryptocurrencies, today's trades, things like that, let's say you want to go ahead and look at crypto we have here. I do track 19 different cryptos, which can be updated every single day based on the exact same levels. You're going to get the ticker, the sentiment, the trade level. Let's just quickly look at what we have in crypto here. One of the things that is really, really important when it comes to paying attention to crypto is that it's a 24-hour market. The thing about it being a 24-hour market means that as we start to look at it, especially something like Bitcoin, you're going to start to see transitions that happen very, very slowly. The moves that we've seen in Bitcoin over the past week or so have been remarkable to see. I'm actually going to look at Bitcoin really quickly just because I can see that it is bearish. And the move that I've seen in Bitcoin has been actually quite remarkable to me. The reason why that it's been remarkable to me is because Bitcoin has been very highly correlated with the type of beta that we're seeing in the market. But if we start to look at what we're seeing over the past 3 months, we can see here that we've gone from bullish to bearish to bullish to we've just recently flipped bearish in Bitcoin. I do not like what I'm seeing in Bitcoin just because, again, as I mentioned, when it comes to the trend, when the trend starts to fall in terms of volatility, things really start to reveal themselves. We are still currently under the trade level, right, which is at 116. And the way that I'm starting to think about things is that even though something's bullish, if it falls underneath the trade level, that's essentially the level 1 alarm. When we start to see something that's underneath the trade level, then it flips bullish, that's a two level alarm. Now we start to see something that is actually hitting the bottom of the range, is now bearish and below its trade level, and now you're negative on a 15-day and a 1 month. I really don't like what I'm seeing in Bitcoin at the moment. I would need to see a resumption at least over 116 over the next few days here, probably higher. just because the top of the range is coming lower and the bottom of the range continues to fall. The bottom of the range just a few days ago was at 115, 116, right? Now the trade level is at 116. And the trade level used to be up at 118. Like what we're seeing in Bitcoin is very indicative of a complete phase transition from a bullish to bearish momentum. And that is not good because this is the very, very end of the risk curve. So if Bitcoin is not showing us the type of momentum and the type of follow through that we would expect, that can definitely start to trickle into global markets. And that's something that I'm going to be paying attention to. But tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? And even if you do you even think this is a good review? And if you're interested in this, again, go to traderanges.com. Go ahead and sign up. All it takes is your Gmail. You can log in. You can start to add things to your portfolio and start to track. I've got cryptos. I got stocks. I got currencies. I got a bunch of different things you might be interested in. I'll talk to you soon.